everybody, my name is Mark, and today is a really good day for me to do a video on my option collar strategy and how it really works. So as you can see, my account is showing some red numbers. Okay, now let's look at Bank of America. It's my main holding. Okay, I own 400 shares of Bank of America. You see right here, 67% of my portfolio, right? So Bank of America is down 41 cents. And the verdict is still not out. The market is still open at this time. So 400 shares times, let's say 40 cents, okay? That would be a $160 loss, right? But look, let me go back to my account and let me show you this. $160 loss? Nope. I'm only down $55.97. Why is that? It really shows how wonderful and just how effective the option collar strategy works. Okay, these puts, these puts I just bought back on the 7th, I believe, the 7th of this month, July. Today's the 14th, and let's take a look at these puts. Okay, first of all, let me show you how much I spent for these puts. So let me put that in BAC and pull it up on the list. And here they are right here. So I spent $205 a contract, bought 4 of them, $830, right? So remember this number, $205. Now, going back to my put options here, pulling them up, and here you go. They are now worth $224. So that is a $19 per contract increase, okay? So that's an almost 10% increase in a week. Now that really shows you the power of leverage that put options have, that stock options give you. Imagine making 10%, 9% increase appreciation on your money in a week. Well, that's what I did on these put options. So that's why my account is holding its value. I use the option collar strategy where when you buy stocks, okay, and I initially bought 400 shares of Bank of America back in April, and I initially bought these put options right here. These are my original put options that I bought, and these ones I spent for about $205. I think I spent the same price, but at the time Bank of America I bought it, it was at $22.93. Well, now Bank of America is at where is it at? Let's take a look. I can't remember. Here you go, $24.20. So that's a let's see, $22.95. That's about a $125 increase. So even though those put options are down 50, these shares are up 120. So I'm way up on that. And then I bought these extra put options because I noticed here, I do charts a lot, and I keep track of trends and support levels and resistance level, and this is what I noticed. Okay, I noticed, and let me turn on my trend lines here. Okay, let me go to the 3-year chart, and here's the 3-year chart. Okay, so you can see that Bank of America has been going up like crazy. Oops, I gotta turn the trend lines on. It's been going up like crazy since the election, but then right here is the key. Okay, so let me go to a smaller chart time frame. Okay, oh, too small. Okay, here's a year. Here you go. Okay, this is what I noticed. Okay, Bank of America has been in a range, okay, and it's got a low right there of about $22, and the high is like at around the $25 level, right? So that's a little range it's been doing. And so I noticed that when I bought Bank of America, that it hit the top of its range, right? And let me go to a shorter term chart, and you can see here's the 10-day chart. And on the 7th was when I bought the put options. So I got those put options right at the top, okay, which is exactly, I mean, I couldn't get it more perfect than I did, right? And so that's what I noticed. That's what made me buy those extra put options, because I believe at some point you should try to make some money and keep some profits. So that's what I did. So I bought those put options, and let me get out of this and go back to my account here. Okay. All right, back to my account. So I bought those put options right here, for $205, and now you can see they're up $19. So I've made very good money on that. So that's what, 20 times 4, almost $80 that I've made on that. Plus the gold is also coming back, my GDX position. But let me go back to my account here. Hold on. Okay, back to my account. So my GDX is up a little bit, gold's going up a little bit, but anyways, back to focusing on my option collar. This really just highlights and illustrates just how well option collars really work, because at some point Bank of America is going to come back up, and by that time when it comes up, guess what? I'm going to make the full profit on the 400 shares that I own, and my money will eventually topple over $14,000. So I really wanted to show you that on how the option collar strategy works. It is for long-term investors like myself that believe that there are good stocks out there, and I happen to believe Bank of America is one of them, but no stock goes up, up and away forever, right? And here's a little nugget of wisdom that I think people need to remember. Okay, as an investor, okay, you are not going to have green days every single day where you make money every day, 5 days a week, 365 days a year. It doesn't work like that. And I think one of the reasons why people lose money as an investor is because they look at a day like this and they go, oh my gosh, look at those red numbers. I'm down $57.47. I better get out. I'm losing all my money. And that's what people do. And they look at these red numbers and they panic and they get out. And so they sell. That's called stock chasing, right? They chase stocks and they get rid of the stocks that are going down because they panic, and they don't really have a plan. They don't really understand how the market works. Okay, but to be a profitable long-term investor, you might have heard the term, it's used in day traders, day trading, finding your edge, right? What is an edge? Well, most traders and investors think of an edge as a statistical edge, right? And I'll give you a little technical analysis lesson here. Okay, so we'll pull up this chart. An edge would be a statistical edge where you look for chart patterns, right? And you try to trade off of those chart patterns. And these are trend traders. And let me pull up a longer chart here. Trend traders look for what direction stocks are trending, and they use moving averages as well, and they use other technical indicators. But like a trend trader would look at this and say, aha, okay, there's a pattern, it's in a channel, right? So a trend trader would wait until Bank of America is down here, and then they would wait for like some of these green candles, right? And they would set a stop loss order down there, and they would put maybe some limit orders up there, right? And they try to trade off those channels like that. But me, that's a statistical edge. And there's a book called The Encyclopedia of Chart Patterns by Thomas Bulkowski. You can Google search Encyclopedia Chart Patterns, and that's a very well-known, famous book. It's like the Bible of trend trading or day trading or whatever, chart patterns, right? And so people will try to trade off of those chart patterns, and there's all sorts of, you might have heard head and shoulders, cup and handle, and just for kicks, maybe someday I should do a video on that and show you some of these chart patterns. They're very simple to understand. But me, my edge is different. I have the edge of options, and options give me two long-term advantages. The first is leverage, which I showed you how much money my put options made. I'm up 10% in a week. How do you make 10% return in a week on an investment? Well, that's what I did on these puts, and I did that purposely as my hedge for my Bank of America holding, because I plan to hold on to Bank of America for a very long time. As long as Donald Trump remains the president, he doesn't get impeached, and the economy does well, Federal Reserve raise the interest rates and jobs and all that stuff, as long as things keep going and there isn't any big black swans that come along, recessions, and I continue to hold financial stocks, right? So that's one edge that I have, is the leverage. The other one is option premium. Okay, and option premium, let me show you my last transaction on option premium. Okay, and let me pull up Bank of America, BAC. Okay, and here, right here, I sold. Oop, let me get rid of this. Right here on the, looks like the 6th. Yes, right here. I sold 4 Bank of America call options right there. Okay, $28 call options, expires on October the 20th for $36. Took in $133. Okay, now let's take a look and see what those options are worth now. So I short sold them. I shorted them. Okay, now let's look at what those are worth now. Here they are right here. Okay, sold them for what, 37 cents? Now you can see that they're only worth $17. So I've made $20 per contract on those. So that's another what, $20 times 4, I did 4 of them, $80. So that's another $80 profit. If I wanted to, I could buy those back, close them out, and make a quick profit. But I'm not going to do that at the moment. I'm going to wait until the options get closer to expiration and maybe collect the whole $133, because that's the way you make money as an option seller. You sell calls or puts, and you wait until the option expires, and as it gets closer and closer, as these options, these stock options, continue to lose value, and you make money like that. So those are my 2 edges that I use with the option caller strategy. I make money off of leverage, and I make money off of these as an option seller. So I did not want to let this day pass by. I really wanted to do this video to really show you just how well option caller strategies work for a long-term investor like myself. And I guess the last thing I'll leave you with is I'm going to repeat myself and say that there are going to be days when you're going to have down days, but that doesn't mean that you have to lose money in the long run. And you watch, in a few weeks, this money right here is going to go back up to over $14,000, and that's going to be a milestone for me, because stocks go up and down and up and down and up and down. No stocks goes up, 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 or down, 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 right? They go up and down and up and down, and eventually Bank of America will bounce, and I will make very good profit when it does. So that's it for this video. Thank you for watching, and I will see you in the next one.